one stock about to skyrocket. It is very related to people lining up to buy gold. There have been reports, pictures, videos of people lining up to what it looks like is buy gold. Question is, are they selling their gold? Has anyone asked this question? And you know what? In terms of amount of gold bought and sold, how much is bought and sold by lining up to do so versus opening up your phone or your computer, right? There might be more humans lining up to buy and sell gold physically in a line, but maybe not quantity of gold bought and sold. So with all that said, my mission is to help you buy stocks before they go up, and in helping to fulfill that mission, this is a stock that I think is about to go up. The ticker is DUST. It is an inverse gold ETF. Let's talk about what that means. And this is not financial advice, but hopefully it helps. Let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's DUST. It's a leveraged inverse ETF. About 2 times the daily performance of basically the opposite of gold. So it goes up when gold goes down, okay? And there's a little bit of fees and expenses, but you don't really have to worry about that, okay? Now, what am I saying? I'm basically saying gold's going to go down, right? Do I know it's going to go down? No. Okay. Am I saying go buy or sell futures, short futures? No. Okay. That is what I'm saying. It's just that this is a stocks channel, so I'm not going to talk about futures, except to say, look at this thing. This is gold futures. Okay, if we just look at like whatever this is called, E-mini S&P futures, this is just the actual market, right? So at 6 p.m. today, this thing will start moving again, just like it did. Today's the 19th, so last Sunday would have been the 12th, right? 7 days before. So if we go back to the 12th, see we got that gap up. This is like the story of the week, right? The story of maybe the month is this thing was chugging up. This is the market, right? It looks like this. It looks like the NASDAQ. It looks like the small cap market, the Russell RTY. It looks like the small cap index IWM. It looks like SPX, which is 10 times SPY. It is the market, right? It went up. There was Liberation Day. We're going to free ourselves from China. We're going to put tariffs on these guys. And yeah, that killed the market. And, you know, we got our voice back and boom, Trump said no tariffs. Everyone's happy. We went above all-time highs. Now we're up here. We had some pullbacks, but this was 2 days, right? Whereas up here, this is a single day. Okay, so this was a pretty terrifying day, pretty massive volume, biggest volume since early August, which was this capitulation day. So, you know, capitulation, right? When people give up on selling and start buying again. You know, in the scheme of things, yeah, it gave back a month, but chugged right back up in a couple weeks. So here, did we give back a month? Yeah, but then we chugged up pretty quickly in the next, well, less than 2 weeks this time. But it's still choppy, so we're still within this day. It's going to be hard to get out of this day because it's so big. So that's all stuff that if you opened up your phone, your portfolio, your positions, you've noticed things didn't go so hot in the first couple weeks of this month. And that's all leading up to say, what are we going to do at 6 p.m. today? Well, maybe you see this video after, maybe you don't care, you don't want to look at your stuff on Sunday, which I get, you know, that's cool. The whole point of this channel and this sort of style of investing is you don't have to look at you can be a busy person. You can check your portfolio once a week. Twice a week would really be better, and every couple days or less would be, you might perform even better than that, but really you can be a busy person, okay? This is not a day trading strategy. So if breaking news comes out and you're at work, you're in your business, you're with your kids, you're with your friends, you're by yourself, going on a hike, going sailing, doing whatever you are doing, it doesn't matter, right? Because in almost all cases, yes, this hurts, but if you zoom back out a couple weeks, we're pretty equivalent to where we were a month ago, right? This isn't a breaking news type strategy that we're talking about. So what strategy am I talking about? Well, here's gold, okay? Over the past, whatever this is, 3 months, from late August, September, all right, 2 months, this thing has gone up 30%. That's pretty massive for gold, okay? It had another period of a few months where it went up 30%, okay, built out a base, and then went up 30% again. So, what does that tell us? In the last 5 years, gold is up, but is it really just going to keep going up forever, or are we going to have a little pullback? We're probably going to have a pullback, right? Probably. And we could get all macro speculative here, where I speculate on, God knows, I can't even pretend to understand what's happening here, where the bond prices are going to go down, and then the stock prices are going to go up, money flows into the market, and the dollar is going to go wherever it's going to go. The worst case scenario, right, is dollar goes down. Okay, that did happen in April. I don't know why I'm looking at 5 years again, but it's fine for these purposes. Dollar went down in mid-April, in February to mid-April, Liberation Day to then the capitulation, where everyone's freaking out in mid-April, where it's like all these e-com businesses are going out of business. Everyone who was in retail is going out of business. They were already going out of business, but now they're really going out of business. And then it's like Bess and Trump are like, it's going to be all right, just that whole tariff thing I said, yeah, just forget about that. We're going to ixnay that. So, Wall Street's happy again, the market goes up. But at some point, this dollar is going to go down, the stock market's going to go down, and the bonds are going to go down as well, okay? And when that happens, we're pretty much cooked. Or gold's going to go up, okay? So that's sort of the uncertainty around this whole gold play. But until that happens, right now it looks like gold is extended, and we can look at some gold tickers. KGC is the main one. I mean, if we were just looking at this as a stock, and I can look at a daily chart, basically 24 hours is what I like to look at, because it includes the overnight wicks, which are pretty scary. If you look at your phone and you're like suddenly in this case the wicks go up, so you're up a lot. But if you look at a daily candle, maybe I've mentioned this, maybe I haven't mentioned it on something you've watched, you can see those wicks are not there, right? So what can happen is, here's a bunch of gaps in this chart. Here it gapped up, but you know what, sometimes it doesn't always gap up, it also gaps down. So I like to just have all the candles connected, seeing as trading is 24 hours in a lot of these. Well, it's certainly 24 hours in futures, but also in a lot of these stocks now, like Tesla, etc. So that's why I do that. But to bring this to a head here, if you look at these stocks, this thing does not look like something that's going to keep going up forever. I mean, this is a breakout. This is up a lot. I actually have this relative strength to the SPY line. This is that blue line. There's a lot going on down here. I promise I don't even use this thing half the time, this whole thing down here. But if you just sort of just look at this blue line, it's super strong. And that just says that this this gold is way stronger than the market. And we can sort of check on NVIDIA. NVIDIA's up above the market. We know NVIDIA is a big outperformer. Just boom, 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 boom up above. If we look at like, geez, who are we going to pick on here? IBM, right? Sort of underperformed the market for a while last year, then kind of did okay, and then, you know, just way underperformed here. So this blue line is sort of just an indicator of that. You can see the market in the green overlay in the background as well. That's another way to look at it. But all that to say, if we look at these gold stocks, they're way overperforming the market. So, you know, I don't know that you, gosh, I'm sort of scratching my head. I don't want to give you the wrong gold stocks. AU, NEM, GOLD, and KGC. Okay, those are some key gold miners. Okay, so NEM, AU, GOLD, which I don't know what's going on with that one, but Thinkorswim can be a little buggy on the weekends, and also you don't need to exactly invest in the perfect one. DUST is the one that I think is the best way to play this gold move, which is to say I think gold's going to go down at some point, and I think this thing, which is the opposite of gold, right? It went down a lot, is going to go up. And you see the volume coming into this is massive. Did have a big day on Friday, so you could buy this, you could risk this low, or even this low if you're even more careful, and then see if you can get a move up to 13, 14 or up, which will be, you're going to see a pullback equivalent in gold futures of a move down to maybe at least like 40, 30 or something like that, right? Something like yours seems totally reasonable to sort of just level out here, which is pretty significant. I can't actually draw on here, but we can use our heads here and say if you go from 4,400 basically to 40 to 4,000, 43 to 40, that's 3 out of 40 pretty much. So that's like 7% move down a little bit. That's a pretty significant move. So that would be accompanied by a 7% move up. Well, actually, this is double leverage, so it'd be 14%, which would be up to like 14. That's not true at all. Actually, 14% on 10 would only be up to like here. Okay, somewhere in here. But that's pretty significant still. Okay, somewhere up here. So especially when it moves 8%, but this day on Friday was pretty massive. Okay, it was above 8%. So you can risk a day. You can sell half when you're up like, I don't know, maybe a little less than 10%. Sell half when you're up maybe around that 14, 15%. So that's the idea. That's the way to play it. If you like these ideas, hit that like button. If you like to get notified when these ideas come out, hit that subscribe. And if you want to share your ideas, get feedback on your portfolio, your stock ideas, talk about it, ask me questions, head over to stockscommunity.com. You can use code Q4, that is the letter Q, the number 4, to get 20% off. So if you think that's worth it, try it out for 7 days for less than 25 bucks. Give that a shot, and I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.